Bitcoin just shattered all-time highs, blasting past $125,000 for the first time in history. And when Bitcoin moves like this, it creates a tidal wave of opportunity across the entire crypto ecosystem. We're talking mining stocks up 5 to 7%, crypto ETFs hitting records, and infrastructure plays exploding higher. Today, I'm breaking down exactly what's driving this rally and giving you 10 specific investment opportunities to capitalize on this momentum. Whether you're a crypto veteran or just getting started, this video could be the roadmap you need. Let's dive in. So let's set the stage. On October 5th, 2025, Bitcoin reached an all-time high of $125,689, breaking its previous record from August of around $124,500. But this isn't just a Bitcoin story anymore. Ethereum is trading around $4,563, up over 10% for the week. Solana hit $233, also up nearly 12%. Even XRP is pushing close to $3. The entire crypto market is in full bull mode. But here's what makes this rally different: institutional money. We're seeing absolutely massive ETF inflows, nearly $6 billion in just the last week. On a single day, Bitcoin ETFs pulled in $985 million. That's not retail FOMO, that's Wall Street. Major institutions are buying Bitcoin as a hedge against currency debasement and government spending. Central banks are printing money, debt levels are exploding, and smart money is rotating into scarce assets like Bitcoin. We're also in what the crypto community calls Uptober. October has historically been one of the best months for crypto performance. Combine that with election year uncertainty, geopolitical tensions, and the halving cycle dynamics from earlier this year, and you've got the perfect storm for a major bull run. Analysts are now projecting Bitcoin could hit $135,000 to $143,000 by the end of this month. That's just weeks away. And some are calling for $200,000 by end 2025. So the question isn't whether this rally is real. The question is, how do you profit from it? Direct crypto exposure. Let's start with the most direct way to play this: buying the actual cryptocurrencies or crypto ETFs. If you want pure Bitcoin exposure without the hassle of crypto wallets and private keys, you've got spot Bitcoin ETFs. The Grayscale Bitcoin Trust, ticker GBTC, is trading around $96. This was one of the first Bitcoin investment products, and now it's a full spot ETF. For Ethereum exposure, there's the Grayscale Ethereum Trust, ticker ETHE. Ethereum is up over 10% this week, with nearly $1.5 billion in weekly inflows and $13.7 billion year-to-date. That's massive institutional interest. And if you want Bitcoin futures exposure, the ProShares Bitcoin Strategy ETF, ticker BITO, gives you that. The beauty of these ETFs is you can buy them in your regular brokerage account. No need to figure out Coinbase or Kraken or hardware wallets. It's crypto exposure with traditional stock market convenience. But here's the thing: when Bitcoin rallies, these ETFs basically mirror Bitcoin's movement. If you want leverage to the rally, you need to look at companies whose stock prices can multiply faster than Bitcoin itself. And that's where mining stocks, treasury companies, and infrastructure plays come in. Bitcoin mining stocks. Now let's talk about Bitcoin mining stocks. These are the companies that operate the massive computer farms that secure the Bitcoin network and mine new Bitcoin. When Bitcoin's price goes up, mining becomes way more profitable, and these stocks can explode. Let's run through the major players. MARA Holdings, ticker MARA, is trading around $18.82 and was up over 3.5% pre-market to $19.48. MARA is one of the largest Bitcoin miners in North America. RIOT Platforms, ticker RIOT, is at $19.44, up nearly 4% pre-market to over $20. RIOT operates one of the largest mining facilities in Texas. CleanSpark, ticker CLSK, closed at $15.94, up over 5%, and gained another 3.5% pre-market to $16.49. CleanSpark is expanding aggressively with a focus on low-cost energy. Core Scientific, ticker CORZ, is trading at $17.82. They recently emerged from bankruptcy and are now well-positioned for this rally. CIFR mining, ticker CIFR, was up 5% pre-market to $15.40 and is approaching new all-time highs. What's interesting about CIFR is they're not just mining Bitcoin, they're also positioning in AI and high-performance computing. Iris Energy, ticker IREN, jumped 5% to $53, also hitting record levels. Like CIFR, Iris is playing the dual AI and crypto mining game. Bitfarms, ticker BIFT, led early gains with a 7.6% jump. They're a Canadian miner expanding their U.S. operations. And Hive Digital Technologies, ticker HIVE, is another major player in the space. Here's why these stocks are so attractive right now. Bitcoin mining profitability is directly tied to Bitcoin's price. When Bitcoin goes from $60,000 to $125,000, the Bitcoin they mined is worth more than double. But their operating costs, electricity, equipment, they stay relatively fixed. That means profit margins explode. The catch is, these stocks are extremely volatile. They can double in a bull market, but they can also get crushed in a bear market. You need to be comfortable with wild swings. Crypto Treasury companies. Next up, we've got crypto treasury companies. These are businesses that hold massive amounts of Bitcoin or other cryptocurrencies on their balance sheets. The king of this category is MicroStrategy, ticker MSTR. MicroStrategy is technically a business intelligence software company, but they're really known now for their enormous Bitcoin holdings. They've been buying Bitcoin aggressively for years, and their stock essentially acts as leveraged Bitcoin exposure. MicroStrategy was up 2% pre-market. When Bitcoin goes up 10%, MicroStrategy can go up 15 or 20% because the value of their Bitcoin treasury increases and the market gets excited about their strategy being validated. Galaxy Digital, ticker GLXY, is trading at $36.16, up 4% pre-market to $37.62. Galaxy Digital is a diversified crypto financial services firm with significant Bitcoin and crypto holdings. They do trading, asset management, and investment banking in the crypto space. Bitmine Immersion, ticker BMNR, just announced they hold Ethereum exceeding 2.83 million tokens and total crypto holdings of $13.4 billion. That's a massive treasury. These treasury companies are interesting because they give you crypto exposure plus operational leverage. They're not just sitting on crypto, they're actively using it in business operations, which can amplify returns. The risk? If crypto crashes, these companies get hit twice, once from their holdings losing value and again from their business operations suffering. But in a bull market, they're rocket fuel. Crypto infrastructure and exchanges. Now let's talk about the companies that provide the infrastructure for the entire crypto ecosystem. Coinbase is the big one. Coinbase closed at $380.02, up over 2%, with pre-market gains of 2.36%. Coinbase is the largest U.S. crypto exchange, and when trading volume explodes during a bull market, their revenue explodes with it. Every trade generates fees, and Coinbase processes billions in daily volume. Circle Internet, ticker CRCL, is trading at $145.78, up nearly 5% pre-market to $152.93. Circle is the company behind USDC, one of the largest stablecoins. Stablecoins are used for trading, moving money between exchanges, and earning yield. The more active the crypto market, the more USDC gets used. Bullish, ticker BULLSH, is at $64.81, up 2.45% pre-market to $66.40. Bullish operates a crypto exchange with a focus on institutional clients. And Bit Digital, ticker BTBT, is up 3% to $3.61. Bit Digital does mining, but also provides crypto infrastructure services. These companies are like the picks and shovels of the crypto gold rush. Even if you're not sure which specific crypto will win, you know that if crypto adoption continues, people will need exchanges, stablecoins, and infrastructure to use it. The advantage here is diversification. Coinbase benefits whether Bitcoin, Ethereum, Solana, or the next hot token takes off. They win when the whole sector wins. AI HPC hybrid plays. Here's where it gets really interesting. Several mining companies are now positioning themselves to benefit from both the crypto boom and the AI boom. We already mentioned CIFR mining and Iris Energy, but let me explain why this matters. These companies have massive data center infrastructure with huge amounts of computing power and energy capacity. That same infrastructure that mines Bitcoin can also be used for AI training and high-performance computing. AI companies like OpenAI, Anthropic, and Meta are desperate for computing power. Data centers are being built as fast as possible, but there's still a shortage. Mining companies that can pivot or split their operations between crypto mining and AI compute rental are incredibly well positioned. TeraWulf, ticker WULF, is another AI-linked miner seeing 5 to 12% gains on this rally. CleanSpark, which we mentioned earlier, is also positioning in this space. The beauty of these hybrid plays is you're getting two.
If crypto booms, they profit from mining. If AI continues exploding, they profit from renting compute capacity. And if both boom at the same time, which is what we're seeing now, these stocks can absolutely skyrocket. There's also the CoinShares Valkyrie Bitcoin Miners ETF, ticker WGMI. This ETF holds a basket of mining stocks, so you get diversified exposure to the entire mining sector. It's trading at $48.19, up 3.66%, and gained over 5% pre-market to $50.68. If you're bullish on Bitcoin and crypto but don't want to pick individual mining stocks, WGMI gives you the whole sector in one ticker. Conclusion. So, there you have it. Bitcoin just broke $125,000, and we've covered 10 different ways to profit from this rally. We've got direct exposure through Bitcoin and Ethereum ETFs. We've got mining stocks like Mara, RIOT, CleanSpark, and CIFR Mining. We've got Treasury companies like MicroStrategy and GLXY Digital holding billions in crypto. We've got infrastructure plays like Coinbase and Circle powering the ecosystem, and we've got hybrid AI crypto plays positioned for two massive trends simultaneously. Here's my take. This rally has legs. With nearly $6 billion in ETF inflows just last week, institutional money is pouring in. Analysts are calling for 135,000 to 143,000 by the end of October, and potentially 200,000 by year-end. But remember, crypto is volatile. These stocks can move fast in both directions. Do your own research, understand your risk tolerance, and never invest more than you can afford to lose. Which of these plays interests you most? Are you going direct with Bitcoin ETFs, betting on miners, or playing the infrastructure angle? Drop a comment and let me know your strategy. If you found this breakdown valuable, hit that like button and subscribe. We'll be tracking this rally and updating you as it develops. Thanks for watching, and I'll see you in the next one.